Hey everybody, what's up? It's Pete. We're going to be creating a game plan for Tuesday, April 7th, 2020. Hard to believe it's April 7th already. Hope everybody is safe. Hope everybody is doing what we're supposed to do. I want to first congratulate Kyle. Kyle sent me an email, took me a little snapshot of a trade that he got in DG, which was actually up 4.5% today, broke out to new 20-day highs. He's had it in his tracking journal. Kyle, awesome job. Also, I want to say, if you like these videos, it would do me a world of favor if you click down and subscribe so you get alerts. And just as important, I want to give back. If you do that, not if you do that, I want to do back either way. Leave comments, leave questions, anything that you find a challenge, or if you want to talk about a particular trade that we called out or something that you would like to have reviewed, absolutely leave a comment and I'll get back to it as quickly as I can. So we're actually going to go straight into the charts and we will take a look at that trade that Kyle had. One of the biggest things to remember is we talk all the time about keeping a tracking journal of stocks from one day to the next. We were looking for this stock to actually continue to remain well bid and punch through this level. Now, you could have made a conservative play and wait for it to get above that level. Kyle actually traded it, according to his email, as soon as it got above the previous day's high, looking for it to retest this 168 level and actually punch through. So good aggressive trade, Kyle, getting involved early while you still had some room to go, which in that case was roughly $5 to $6. So you did have some room to go. And room to go in our terminology basically means profit potential that justifies the risk. So now, interesting setting up tomorrow, how I would manage this trade tomorrow. Because it's now well bid 4 days in a row and actually 7 out of the last 8, something like that. We actually, not well bid, closed above the open. Tomorrow, if this stock opens higher and pushes higher, I would be looking to get out of the trade as it pushes through that level if it's a swing trade. It's a longer term position, a much longer term, what we might call a position trade. You can watch for it to push through, hopefully pause and stay above the 168 level. But for me personally, where my trades are in that 2-day to 7-day window, if this opens higher, pushes higher, that's going to be a really significant move over the last 4 days. I call that a saturation point, where the buying pressure or the selling pressure saturates after a while. You get that one last bit of late buyers, and then you could usually sell to them on the way up, and typically it'll reverse. So that's how I'd be trading it tomorrow, Kyle. Nice job being super aggressive and smart, having a good game plan, knowing you had room to go to the next trade. We're actually going to start out with some trades on the opposite side, ones that we mentioned yesterday. We were looking for some of these airline stocks and some of these stocks specifically that had 20-day breakdowns. What we said was a possibility of looking for a new spot to nibble, not get all in there at one shot, but nibble is if we saw an inside day in these breakdowns. And that's almost what we saw here, not perfectly in AAL, American Airlines, but pretty close. And GSX, similar, which actually did have an inside day. So typically when you have a 20-day breakout or a 20-day inside candle, which follows the breakout or the breakdown, more often than not, when you get that inside candle, instead of following through, so in this case here of GSX, instead of actually having another well-offered candle showing that there's new lower lows and lower highs, typically can catch the people not paying attention to the fact you had an inside candle. And tomorrow you can actually end up spiking back to the upside. So if you happen to be short this stock, pay attention to that. If you want to make an aggressive trade, now again, 1-day trade, no clear order flow there. The stock really hasn't moved. So we're really kind of working our way around positions and if-then scenarios. The reason I call this one out is because it's a reliable play, because so many people trade 20-day breakouts and 20-day breakdowns. But when they don't follow through, you got two people that get involved here. One group of people that get caught on the wrong side who have to buy it back, in this case, to get out of the short sale, and then other traders that might be aggressive, like we're considering right now, to look for a quick trade to the upside. And if it does spike, I'd be looking up to that $42 level only for a 1-day trade. What I do want to talk about, though, is something that we discussed yesterday, and I brought it up in a really big way, and hopefully everybody really took it to heart, because this is really where the month and the week and the day gets off to an unbelievable start when you get follow through. When you get follow through off those inside candlesticks, bam, we said specifically hold to the close if you have no reason to get out. And you can see Nike and even the SPY, actually, which wasn't quite an inside day. It was close, so maybe it was, we're looking at that consolidation. But really the key here was, what did you do the rest of the day, which was this. We said the trade of the day wasn't an individual position as much as a mindset coming out of those inside candlesticks. And we had a big list of them yesterday. And holding and not getting involved in the wiggle and the jiggle and the up and the down and everything. We got exactly what we were planning for. Remember what I've said in previous videos, when the market does exactly what you plan for, go get it. Make what you're supposed to on those days, because there's going to be plenty of other days where you might have 10 trades that only 2 of them do what you're supposed to. Great, you'll print money on those 2. Forget about the other 8. But today we came into the day saying clearly, if these inside candlesticks break out or break down, in this case, the market really exploded and stayed there. That's the big thing. We stayed above most of the opening ranges. We stayed above the opening price almost the entire day. Really not much reason to get out. And you could even exaggerate it here on the hourly chart of the SPY, where you could just see it just kept staying well bid or an inside candle for pretty much the entire day. So if you happen to have really built that list, I think we had like 7 stocks, and if not more than that yesterday. I think Home Depot is one of them, where you get these, we get the gap. In this case, a gap. We're actually, gaps can be a little tough. And here's the thought process. I actually had a couple of people message me in the coaching program today in our Slack channel saying it's up so much, I can't buy it here. But the bottom line was there was no reason to sell it, and it was a bullish environment coming out of that, so it was a much easier play. So getting back into some of the other trades that we have on the docket for tomorrow, Sienna actually had a super good breakout, finally got above this 44 level. Now, you might say, well, isn't this just an aggressive trade like the other one? No, because if you look here, this stock is not well bid 4 or 5 days in a row like DG is. This one is actually a first-time breakthrough. Even though it's up 11% today, it's cleared that 44 level. So here's the trade in Sienna for me tomorrow. I need to see it stay above 44, and if it opens up lower, that's fine. I need to see it stay above 44, but then trade above the opening range, and it's a little bit later entry to get involved. If you're looking to swing trade this, you have no choice but to wait for it to trade above today's high, which is above that 45 level, and have a buy stop up there and stop loss if it comes back in. That's how I would manage it. Another one that's interesting is Walmart just exploded through the 120 level today. You can see here clearly we've been well bid, explosion through that level, very similar now. And let's zoom this out so you can see why it's a big level. 120 is a level that every time in the last 6 months has gotten up to this level, it just gets slapped right back below that. So if you want to trade this, same as the stock we just looked at, you need for it to get above that level like Sienna, which today has a $7 move from low to high. It's got to trade above the 126 to initiate a new swing trade. The thing is, these average true ranges are really expanding dramatically, which we're going to get into Netflix in a minute. So you're probably going to have to trade less share size to risk the same dollar amount. But I do like Walmart on follow through here, but it has to meet that criteria. Has to meet the criteria, meaning it's got to be above today's high. Next, another one, again, the power of keeping a tracking journal. DocuSign, we actually said we needed to see it get through this level. Hasn't gotten up through there yet, but this is one we're keeping in the tracking journal. If you remember, we drew our levels here, and we said we need to see, we like it long, but we like it above this level. Got slapped back, got slapped back, got slapped back. Now we're going to approach that level again. So this is in my tracking journal for tomorrow. If we get above that 92 level, remain well bid, I'm going to look to initiate that and hold it. Netflix is an interesting one because we can end up testing. I'm going to just zoom out here so you can see it. This is a stock that's a really popular active trading stock right now. This 385 level has been resistance going back how long now? All the way back to July of 2018. So this is a really big level, and it looks like we're going to open higher and test it again tomorrow if we get a flat opening and a push. And again, very, very difficult to be bidding stock into this resistance that's been holding up for basically a year and a half. However, and I want to say this now, April 6th in the afternoon, this stock finally punches through there on volume and stays there for a day or two. We've got some room to go through there. And if I'm not mistaken, I already have that line drawn as well. Yep, we're looking all the way up here in the 420 level. So we got about $40 if we punch through this level, $35, $40 depending on the level. So again, another stock for the tracking journal. We got to watch that one tomorrow. that has an average true range of $21. So that literally could reach the profit target in 2 days if we get above there and stay there. I want to call out Microsoft. I had a few people message me about Microsoft today. Absolutely had an awesome day today, but there's really not a lot of order flow or really solid momentum. See the distinction here between closing above and below the opening, alternating each day. If you're going to trade on nothing but short-term momentum, kind of like what we're looking at DG before, you want to see a consistency to well bid and closing above the open. We're actually not seeing that in Microsoft right now. So despite the fact that it's rallied from 132.50 to 165, which is no small rally, the consistency from day to day doesn't warrant trading and looking for a long tomorrow. I'd actually rather see it go sideways for 2 or 3 days and pause and look for the next move higher. But even then, you got resistance here at 172.50. Not a monster profit potential for what you probably have to risk 1-to-1. So I wanted to point that out as a stock to kind of stay away from, despite the fact that it was up almost 7.5% today. So again, reading into stocks that look awesome, but when you get into the notes of the candlesticks a little bit more, you start to see clues that tell you, yeah, it's a nice move, but it's not consistent where you feel comfortable bidding for stock in that up in that area. A couple of other stocks I got on the long list for tomorrow. These are stocks that actually punched through a resistance level that they've been having a hard time with, and we said if they punch through, you can actually see here in Broadcom, we actually broke the downtrend, finally got through this level, and here's the next level of resistance. So we have some room to go in AVGO. Amazon, actually a little expensive, but some people are trading these stocks with options as well. Amazon finally punched through this 1975 level as well, has to stay above that level. You can see you got room up to 2100, up to 2175. Again, this is an expensive stock. If you trade it with options, obviously that sucks some of that volatility out of it as far as where your stop loss is going to be. And Citrix, which hopefully you've had this in your tracking journal as well. We were looking for this to hold, pause above the 142 level. So far it has, and actually now has traded higher as well. This is one, though, you can see the inconsistency as well. What I don't like about this stock is, from a swing trading perspective, where are you going to put your stop loss? This is one of those stocks where it whips around so much. It's not hard to tell the direction, but because of the way it trades, you can get stopped out, love the trade, see it move without you. In this particular circumstance, if you like this trade, for me personally, one of the trades I would be doing here is if I wanted to be long, I'd be buying stocks and buying shares and also buying puts as a downside protection. So I'm not going to get keep using the term wiggled and jiggled out of that exact spot. So there's certain situations where you can look at the chart and see the wicks, which is what's happening here above and below, and how often they happen above and below the body of the candlestick. If you like the situation, it's sometimes easier to combine options with buying the outright stock so you don't get shaken out of a good trade. On the short side, actually, United Technologies, that's not the right one. The stock showing some relative weakness on a day that the market was just a beast to the upside. So I'm looking to short sell this tomorrow below below today's low. Today's low was let's say $85. I'm looking for a short sale below 85, looking for it to get down to the 72 level over the next couple of days. Costco is another one that exploded to the upside today. This is actually one of the ones that I wanted to point out to really drill the day home about looking for those inside candlesticks as one-day strategies. You can see Costco doesn't really have clean order flow to the upside or the downside. But what we do have here is an inside candlestick breakout. And remember what I said, hold to the close if you don't see a reason not to. And look at this trade above the opening price, $292.50 to $305, $13 right out of yesterday's playbook. So hopefully more people took advantage of that one. I also want to discuss and end the day with talking about the stocks that seems to be everybody's talking about right now, which is cruise lines, RCL, and you obviously can't not look at these without dropping volume in here. You can see you get the picture. The volume is just abnormally huge here. Whether you want to call it accumulation, cleanup prints, it doesn't make a difference. What I do like here, though, is a positive day with monster volume, up 21%. On monster volume. That is a big sign. It's continuing to tell me personally that we are actually seeing signs of accumulation here. Now, a big thing, and I'm going to go through the rest of them. United Airlines, okay, actually an inside candlestick here. CCL, Carnival Corp, also bouncing, and Love, Southwest. So the point that I want to get across here is about accumulation and distribution. I'm actually going to go back to the market in a second. I want to keep reiterating this because it's being misinterpreted. Accumulation or distribution is after a long downtrend, you get these spikes in volume where price stops going up or down. So in this case, after it's going down, you get spikes in volume and price kind of goes sideways and specifically doesn't make new lows or doesn't make new momentum lows. Does that mean this is the absolute bottom? No, no. It could go a little bit further than that. If it's a signal that takes longer to play itself out, where the right play for me, again, I'm giving strategy and tactics. The right play, if you see accumulation, is to be building a position for a much longer term turnaround and a potential move back in the other direction. We all know the situation and the reason these stocks are getting beaten into the ground. They're getting beaten silly for a real reason. But the volume spike without price going down, that makes you sit back and say, that's interesting. So anyway, I want to make sure we got the distinction between the two. It's a longer term play. It's not one of those things where like I'm going to buy it tomorrow and it's going to do something the next day, right? So I just want to finish up with something that we've been really drilling home, which is actually taking a look at how a lot of these trades that we're looking at now are looking on the weekly chart. If you remember coming into today, we actually said that the SPY was almost an inside candlestick on the weekly, but trading near the highs. We need to see it get above. So what's exciting now is we actually can now set the opening price for the week in the SPY, and as long as we stay above that level and or well bid and well above the opening price on our daily candlesticks, and specifically if you're swing trading, as long as we stay above the weekly and remain well bid on the daily candlesticks, we can start to nibble a little bit more aggressively on the long side. A lot of people I'm speaking to, myself included, believe that the downside is not over. But we do have to pay attention to when price tells us that's the right price, we have to pay attention. So if you look at the SPY there, the Q is a little bit different where it didn't have that big spike down, but again, cleared the high. And now you see we have the line in the sand, right, for the weekly candlestick here in the Q. So we're also well bid here, which is kind of cool too, right? And the Dow, same thing, right? So if we get into some of our popular stocks that we like to trade, Tesla is technically inside. So Tesla is looking for on a weekly explosion where we have an inside candlestick followed by another inside candlestick. What did we just say about inside candlesticks on the daily? Imagine Tesla on the weekly chart breaking out of these two weeks of consolidation. Same thing here with Boeing. We had this big spike up here. I actually do know quite a few people that got long in this little spike to the upside. Really was more of a guess. They didn't know anything. They just thought the stock was beat up. Now the stock's consolidating for a couple of weeks. So again, hopefully you're making a tracking journal of stocks on the weekly chart for longer term plays. Everything doesn't have to be a trade for tomorrow. We break out of these. You go well bid for a couple of weeks. You can hold one of these trades for a couple of weeks, like over here. 1, 2, 3, 4 weeks in a row of well offered. Are we going to come out of this to the other side? I don't know, but I'm hopefully prepping you to understand what to be looking for, because the last thing we want to do is see it after it happens. We want to see it while it's happening and prepare for it. Now, Walmart on the weekly chart, interestingly, is actually coming out of an inside candlestick breakout to now it's well bid, and that's actually looking pretty good on the weekly chart, a little bit differently just on that micro 2-week time frame. So hopefully you can go through your own charts. You'll get a feel for how that actually works. We are drilling down to breakouts, breakdowns, inside candlesticks, double volume, what's well bid, what's well offered, and then taking it out, going up to a higher time frame for a little more conviction. So I'm looking for follow through tomorrow on the long side, barring any more dramatic news that might have a spike to the downside. So remember that example that I used in Microsoft. That should help you have a conviction level thermostat, where Microsoft was going red, green, red, green, red, green, despite the fact that it went up. So there's something different going on under the hood there versus Dollar General, DG, where we're seeing well bid, well bid, well bid, and green the whole way. So a little bit different way to read the charts there. And hopefully I'm helping you make some more distinctions to get in there and read them a little bit deeper than just saying, oh, it's above the moving average, I want to buy it. No, there's more to it than that. And hopefully we're going to learn all that stuff together and hopefully come out of this really chaotic market where you make that leap from being a trader who is just reading charts to somebody who's a tape reader and being a trader who really makes those distinctions to make money. So have an awesome night, everybody. Be safe. That's our game plan for Tuesday. We're well bid, looking to remain well bid in a lot of these stocks. If we remain well bid on the daily candlesticks, you can look for some trades. I don't have a lot of short sales today for a reason. Most of these shorter term trades are well bid now in the weekly candlesticks and closing strong. And the ones that were weak don't have a lot of room to go. So the short sales might actually have to wait a little bit more until we break out. It's going to be interesting to keep an eye on those cruise ships and the airline stocks to see if that accumulation now does give us a reversal on the weekly candlesticks to potentially start to look for a spot to get long if you have a longer time frame. So have a great night, everybody. If you found the video helpful, please subscribe and absolutely leave your comments and questions. I'll be more than happy to get to them as soon as I can. Have a great night, everybody.